Good afternoon. My name is Casey Rockmore.
I'm Justin Cook.
My name is Xavier Hill.
And I'm Keon Thomas.
And we are BrickHouseCapital Management.
And this is our Portfolio 3 report. This is the third week we're leading in the standings. And we're just going to give you a little update on the companies in our portfolio. So for the first company we have iRobot Corporation. They have an exceptional performance in our portfolio. Our number one company closing March 1st at $29.56. It's just holding our portfolio down at this point. Our investment horizon is to the end of May. We're going to keep a close watch on iRobot Corporation. We might take profit next week. They have surpassed our expectations, and we're very pleased with iRobot Corporation at this point.
Our next company is Centene Corporation. They have not been doing so well lately. We are going to keep a close eye on them to make sure that there are positive trends to look forward to in this next upcoming week. They closed at $61.04 on March 1st. And so Centene has had a lot of success this in 2018, and we're hoping we can get some of that success in 2019.
As for Broadcom, we're currently trying to reevaluate whether or not we're going to keep them. We're trying to figure out if we do keep them, how many shares, because right now we're on a second straight week of losing $4 with them. This week's closing price was $272.51, whereas last week's it was $276.50, which we're really just, like I said before, trying to figure out how much we're really going to be investing with them moving forward. Like we said, it's a great company, great quarter four earnings, it's definitely projected for great growth, but as of right now, we definitely just have to reevaluate the decision as a whole.
Going on to Six Flags Entertainment Corporation, we are also satisfied with Six Flags at the end of week 3. They have brought in nearly 10,000 profits, and their amusement parks are still not open yet. Six Flags Entertainment, they closed at $57.12 last week, and now they're up to $57.87 as of March 1st. And their stock prices have just been fluctuating, and we are confident that this trend will continue to be upward as their amusement parks open next month, and we're continuing to back Six Flags as a corporation.
The next company in our portfolio is Procter & Gamble and Company. So Procter & Gamble closed at $98.44. Last week it closed at $100.25. Procter & Gamble is a household name. It's our anchor company for BrickHouseCapital Management. We're very confident in Procter & Gamble as a supplier to multinational companies like Walmart, Target, Costco. We're not too deterred by its $2 negative performance over this past week. We're going to keep them in our portfolio and have them as our anchor company going forward. We're very confident in their operations, their low margins, but their, ultimate bottom line success. So Procter & Gamble Co., we're going to keep them in our portfolio and, just see their success going forward.
Our next company, Sprouts Farmers Market Incorporated. We acquired Sprouts on the 22nd, and it closed on March 1st at $23.20. That's just a few cents lower than what it was on the close on February 22nd. Sprouts surprised many people with their fourth quarter earnings report up 5.6%. In spite of reporting better than expected results, shares kind of fell 3.5% during the trading session on February 21st. This can primarily be attributed to the company's view, which was not well received. But we are still very optimistic about future growth over the next few weeks, so we'll keep a close eye on them as well.
As for Accenture PLC, they brought in over $3,000 worth of revenue for our portfolio. Although their share price actually dropped a few dollars. Last was at $161.50, and the previous week it closed at $164.20. Like I said before, we made previous profits off this specific stock, but right now it's giving us a little pushback. However, Accenture actually just kind of took a full deep dive into the life insurance sector. They're really trying to broaden their spectrum as a company as a whole, and so we're definitely going to be able to look at more stability towards just pure growth moving forward.
Moving on to Sony Corporation. So Sony Corporation's at the end of week 3 has been the same as last week. Sony Corporation, they closed at $47.89 on the 22nd, and now they're up to $47.89 March 1st. So still pretty stagnant, not really moving too much. The company remains in a strong position in their existing secular growth areas, and it has promising new lines that it could be a substantial growth drivers in the future. And we feel that the company continues to remain as a strong long-term buy investment. And Sony announced its selection of free games for the PlayStation 4 platform coming this month. And we see this as not only a great opportunity for the users of Sony, but also for Sony as a corporation to continue to have growth in profits and their stock prices to increase.
The next company on our portfolio is NXP Semiconductors NV. So we acquired them on the 22nd of February at $94.51. They closed the week off at $94.25. Not too much fluctuation. We're gonna have to keep a close eye, see what's going on, see their future perspectives over these next couple months. But we're gonna keep them in our portfolio and see what they do.
Our next company is the Goodyear Tire and Rubber Company. We acquired Goodyear on the 22nd of February, and it closed at $19.35 then. And on the 1st of March, they closed at $19.75. So not too much fluctuation. So their stock progression has been pretty slow since we bought them, but it is an increase, none the least. The Goodyear Tire and Rubber Company has officially replaced Wabtec in the S&P Mid-Cap 400 on Wednesday, February 27th. So Goodyear will be better represented in the mid-cap market space due to this change, and we think this will increase growth over the next few months, hopefully at a faster pace.
So unfortunately for NVIDIA, we're actually in the same boat as what I spoke about before. NVIDIA actually is in a more consistent downturn once again. As of March 1st, it closed at $156.45. In the previous week, it closed at $159.19. And so as of right now, it's just, it's unfortunate it's in a fluctuating downturn instead of upturn. So we're definitely looking at getting rid of the stock, and if so, the question is how much.
Moving right along to Caterpillar Incorporated. So we are still very satisfied with Caterpillar's performance despite their slight decreases this week. They have brought in nearly $700,000 in profits last week, and now at the end of week 3, their profits are now down to $585,000. So we see that discrepancy there. And also on the 22nd of February, Caterpillar Incorporated closed at $138.68, and now their stock price is at $137.47. So as again I said, slight decreases, nothing to be too worried about. We saw a $10 increase in the first 2 weeks, but now we see our first decline. So even though it is very slight, we are still very confident in this company, and we're still very proud and happy about the way it's performing. So it's solidifying our beliefs, and it will be moving into week 4 with us.
Most definitely. And the next company in our portfolio is Johnson & Johnson. So over the past week, Johnson & Johnson's stock price has jumped $4, $138.85 at the end of March 1st. And on February 22nd, it closed at $134.43. So Johnson & Johnson participated in the SVP Leerink Global Healthcare Conference this past Thursday. Along with a steady progression in our portfolio, we have an optimistic outlook on Johnson & Johnson. Like I said, with Procter & Gamble, it's another household name. We're very confident in Johnson & Johnson. And over our investment horizon, we're going to keep them in our portfolio and evaluate their performance as so.
Our next company is Snap Incorporated. We acquired Snap on the 22nd of February, and it closed at $9.71. And then on March 1st, Snap closed at $9.80. As we stated last week, Snap has been going through an identity crisis, and part of that is caused struggles with corporate culture and younger generation spending too much time on the app, causing them to be highly distracted from work, school, exercise, etc. Snap's stock prices have been pretty boring this week, but this is the first week they have been in our portfolio as a group, so we're remaining hopeful as for an increase.
As for Stryker Corporation, it's actually been on a steady uptrend. We actually haven't seen much pushback with them. This week it actually closed at $191.58. As of last week, where it closed at $188.67. We've just pretty much been pretty happy with the success we've seen with this stock, and we expect nothing less.
Apple Incorporated, we are satisfied with their performance at the end of week 3 as well. They have now brought in over 170,000 in profits, which is up from last week when it was only 80,000. On the 22nd, they closed at 172.97, and at the end of week 3, they have now closed at 174.97. So we see our increase there of $2. In a report posted on the 28th of February, Apple's Apple Watch represented half of the 18 million global smartwatch shipments in Q4. And also, Apple Incorporated seems to have a stock price trend of fluctuating increase now in the 170s, but they have brought in a decent amount of profits for our portfolio so far, and we will continue to keep an eye on Apple as the weeks go on, but we are confident in our stake in the company at this point.
So the next company in our portfolio is Becton, Dickinson & Co. So over the past week, their stock price has rose over $5 to $254.37 from $249.66. So their increase in stock price can be attributed to their purchase of C.R. Bard, which is a multinational developer, manufacturer, and marketer of medical technologies in this company. I feel like Becton, Dickinson & Co.'s purchase of C.R. Bard has been the ultimate driver in their performance in Q1, and we expect the same performance in Q2. So we're going to keep them in our portfolio, keep them having a very high success rate, and we're going to evaluate them as so. We're loving it, Becton.
Our next company is Starbucks. Starbucks closed this week or on March 1st at $70.85. This is about $1 less than it did last week. Starbucks has been facing a lot of fears with their expansion to China, and that is still going on this week. London Coffee, which has ambitions to overtake Starbucks in China this year, has gotten 3 banks, including Credit Suisse, on board to work with them for work on a U.S. IPO. And the fears have been shot down due in part to the store accelerating 4%, which is 2% over the last quarter.
As for Diamondback Energy Incorporated, we actually just recently acquired them on February 22nd. We acquired them at $104.12. That same day, it actually rose to $104.03. A week later, it rose to $104.79. So we're just been overly pleased with our purchase. Came in at the right time. It's definitely been a blessing for our investment portfolio. Their profits are actually completely tied. Not completely. They're tied closely to West Texas Intermediate crude oil, which kind of dictates like a lot of their earnings and everything. So they're kind of regardless of their value chain and how they operate, and more how efficient they can be. It really just depends on the prices of the crude oil. However, since a lot of things have been going on internationally, like with Exxon's finding of a new oil sector, we're definitely looking to see how Diamondback Energy tries to take advantage of the situation.
And for Monster Beverage Company, they closed at $58.44 last week, and now this week their stock price is up to $64.74. And this weekend was Monster Energy's AMA Supercross FIM World Championship Series annual race held here in Atlanta at Mercedes-Benz Stadium. It drew a large crowd, and along with the increase in merchandise sales, and saying that for both paraphernalia and beverage sales, because if you buy a can of Monster, regardless of what kind of Monster it is, and you bring it to the actual Supercross event, you can gain free access to the Monster Energy Pit Party, which also brings a lot of information about Monster as a company and a lot of promotion for their company as a whole, with the whole event happening in the new stadium and just in Atlanta in general. And we are still highly satisfied with our stake in Monster and going into week 4. So we'll be actually looking to possibly buy more shares of Monster if it permits in the weeks coming.
And our last company is Roku. We acquired Roku on the 22nd of February, and they closed at $64.47 on that Friday. And they closed on March 1st at $69.08. Roku has shared their fourth quarter earnings this past Thursday, which was very impressive. The core operating metrics continue going down the right path along with the advertising. With a growing audience, Roku seems to be on its way to substantial growth. Revenue rose from 45% to 45%. Revenue rose 45% to $742.5 million in 2018, and Roku is expected to reach $1 billion in revenue in 2019. There are now 27.1 million active users streaming through Roku, 40% more than a year earlier at this time.
And now with the new televisions that you buy, Roku usually comes already as a platform on those televisions. So if you're buying a Roku TV, you're also basically giving, to the company as well. So any television purchases are also going to Roku's profit. So that's also doing a wonderful job for their company in our portfolio. So we're definitely happy to have them on board. And with that, that's the end of our Portfolio 3 report. We hope you enjoyed. And we're going to continue to be solidified because we are
BrickHouse
Capital Management.
That was a great one take.